Kids next door.
What's good? My name is Zayn and welcome to ZAYN Capital. And on today's video, we're going to be looking into supply and demand. Remember, this is just the catalyst, man. At the end of the day, the true lesson is on the chart, right? But my hopes for this video is to at least try and help someone, right? Or maybe help them see what they have been missing while they were back testing to be able to propel you into new information, right? Maybe it might help you see something that you haven't been seeing, right? So it's literally nothing special, but but watch the entire video until the end. And yeah, man, I hope I help someone. Let's get to it. So let's get to it. So basically, for you to be able to understand supply and demand, right? For you to be able to understand supply and demand, you have to firstly understand what market structure is, right? What market structure is, right? So you have to understand what market structure is, right? Now, what is market structure? What is market structure? Yo, Zayn, what is market structure? Now, market structure is basically how the market behaves, right? It is the behavior of the market. It is the behavior of the market, right? It is how the market behaves, right? It is the behavior. Oh, I missed the new day, but it's fine. So it is the behavior of the market. It's basically how the market behaves, right? So it is how the market behaves. So for example, right? For example, so if the market is now moving in an upward movement, né, and then coming back down to mitigate that area right there, and then creating new highs towards the upside, moving in an upward movement like that, we are saying that this market is in an uptrend, right? So we are saying that the market is in a uptrend or a bullish movement, right? So we are saying that this market is in an uptrend or a bullish movement, right? Or a bullish movement. So we are saying that this market is in an uptrend or a bullish movement, right? Why? This high because this high is higher than the previous high, right? And this recent high is higher than the previous high. Doesn't make sense, forming an upward type of movement or an upward type of trend. Doesn't make sense. So in that, we are saying that this market is in a bullish movement, right? It's in a bullish movement. The reason why, fun fact, the reason why we call it a bull movement is because when a bull attacks, it swings from the bottom to the top. So basically it hooks you from the bottom to the top and lunges you to the top, right, in the air. So that's basically why they call it a bullish movement, right? Maybe you didn't know that. Just that is just a fun fact, right? The origin of the word bull or bullish market and stuff like that, right? And similar as if this was inverted, right, and the market was creating lower lows and lower highs, so we are saying now that this market is basically is currently in a downtrend, right? We are saying that this market is currently in a downtrend. Why? Because um this low is lower than the previous low, right? And this low is lower than the previous low, and this recent low is lower than the previous low, right? And so forth, right? This high is higher than the current high, right? And this current high is lower is lower than the previous high, and this high is lower than the previous high. And we are saying that this market is moving in a downward trend, so it is basically bearish, right? Another fun fact, the reason why they call it a bear market is because when a bear attacks, it stands up and it smashes you to the ground. So that's why we call it a bear market. So it is a market or a trend that is trading or trending in a downward movement. Doesn't make sense. So for you to be able to understand your supply and your demand, so we are saying that every single time the market every single time the market forms a new high and then mitigates this impulsive movement, right? So every single time the market advances towards the upside, right? Every single time the market advances towards the upside, what happens is that immediately after it forms a high, it then mitigates that movement, right? We call that a corrective movement, right? We call that a corrective movement. So let's highlight that as blue. So we call this a corrective movement. So we're saying that the market is now correcting, right? It is correcting or retracing, whatever you call it, right? So we are saying that it is correcting, right? It is correcting. It is moving in a corrective manner. So it is correcting, right? And this becomes your, and this is your impulse move. Now this is your, that's your impulse move. Now this is an impulse move. It is impulsing, right? It is impulsing. So that becomes your impulse move. So the market created an impulse and then it corrected and then it impulsed towards the upside. So the word mitigation, it means to lessen something, right? To lessen something. So it came back to lessen this entire movement, this impulse move before advancing again towards the upside, creating another impulse move towards the upside. Doesn't make sense. Creating another impulse move towards the upside. Now we are saying that if the market now then respects this low that is resting upon that area right there, if this market immediately when it corrects and then respects this low around this area right there and then advances towards the upside, creating newly formed highs, we say that the respected zone or the respected POI, the point of interest that was there, we consider that as our then demand, right? Why? Because the market advanced towards the upside. Now the market is in demand, right? It is in your demand zone. So it is headed to supply. So it is supplying the products that are in play, right? Or are in the market, right? And then immediately after the market tapped into your demand, it then advanced towards the upside, forming newly formed highs, right? And then now this, since is your impulse move, right? Since this is your impulse move, now what is this? Exactly, that is your corrective move, right? So the market is now then correcting towards the downside, right? Now if the market respects this area right there and then decides to advance towards the upside and then decides to advance towards the upside, what would we call this area right here? Exactly, we would call that area a demand, right? That will be our demand, right? That will be our demand. So basically demand is every single time the market, it only appears in an uptrend. When the market comes back down after an impulse move, comes back to mitigate, it respects that low and then advances towards the upside, that's what we call your demand. And don't worry, we are going to look into how to identify your demand and your supply properly, right? Now let's go to your supply, right? Let's go to your supply. So same as your supply movement, right? So as your market advances towards the lower side, right? Now this is inverted, right? Now that what that means is that this becomes your impulse, right? Now this becomes your impulse move, right? Now this becomes your impulse move, right? This becomes your impulse move, right? Let's just change colors to that, right? Now this becomes your impulse move, right? That becomes your impulse move to the downside, right? And then the market mitigate and forming, like, and then immediately after the market impulse towards the downside, it formed a newly low, right? And then mitigated back into this area right there, right? Forming what we call a corrective move. So that becomes your correction, right? So the market corrected from there, right? I think by now we know, right? So now this becomes your correction, right? And then from there, after that correction, what did the market do? The market then advanced towards the downside again, right? And then from there, forming a newly formed low. forming a newly formed low, a swing low, right? And then from there, the market mitigated again. So the market gave you an impulse move towards the downside again, right? And then from there, the market corrected that movement, right? And then the market corrected that movement, right? And then respecting this high and then advancing again towards the upside. Now we're saying that the respected zone or the respected POI, that is then what we call our supply. Doesn't make sense. So we have your supply, right? And then after the market advances towards the downside, forming newly formed lows, and then mitigating again to that area of interest, right? What would we then call this? Exactly, we would call that our supply movement towards the downside, right? So that becomes your supply. Now that's what we call your supply and demand. So demand is at the bottom, right, on an uptrend, and your supply is at the top on your downtrend. Doesn't make sense. So that's basically what supply and demand is. Let's go into the chart, or let's do a few examples for us to be able to understand what supply and demand is. All right, what supply and demand is. Let us just clear that chart, because I was looking at this trade to advance towards the upside. All right, so let's just look at this chart. Right, so on this chart, let's start firstly with the upward trend, right? So the market advanced towards the upside. Do you see that? So the market advanced towards the upside, and what did the market do? It then corrected. Do you see? And then it then corrected. Let's just reduce this. And then it then corrected. So that becomes your correction. And then the market advanced again towards the upside, right? Forming another high that is resting upon that area right there. Forming a newly formed high that is resting upon that area right there. And then what did the market do immediately after it created this impulse? What did the market do immediately after it created this impulse move, right? It mitigated, yes. So it mitigated price, right? So immediately after the market mitigated price, it respected this low, right? Now, after respecting that low, what do we then call that? We call that your demand. Exactly. So that becomes your demand. And then immediately after that, the market advanced towards the upside, forming newly formed highs, right? Forming newly formed highs that are resting upon that area right there, right? After mitigating of this price, right, the market then formed another impulse move to the upside. Doesn't make sense. And then immediately after it formed the newly formed highs, what did the market do? The market advanced towards the downside, and then what happened? It respected this low, right? And what do we call that? That is our demand towards the upside. And then from there, the market then advanced towards the upside, creating or forming newly formed highs, right? That's basically how you identify your supply and demand. So let's look at quickly at a downtrend, right? So we can see a short-term downtrend that is resting upon that area right there, right? So instead of that, so we see that the market, firstly, number one, it dropped towards the downside, advanced towards the upside, dropped towards the downside, advanced towards the upside, and then dropped again, right? That's basically what we can see, that the market is in a bearish movement, right? So the market advanced towards the downside from here, right? Forming newly formed lows. Exactly, forming newly formed lows, right? So the market formed newly formed lows around that area right there. And then what did the market do? The market advanced towards the upside, right? Respecting this high, right? Respecting this high, forming what we call then our supply, right? And then the market advanced towards the downside, right? Forming again newly formed lows, right? Forming again newly formed lows. And then what did the market do? The market then mitigated price, right? And then came into our point of interest, which is this area right there. And then what did the market do from there? The market then flashed towards the downside, right? Forming newly formed lows, which is this area right there, right? And then from there, what did the market do after this? It mitigated towards the upside. It mitigated towards the upside, right? It mitigated towards the upside, right? Respecting this area right here of interest, right? And that becomes your supply, right? That becomes your supply, right? And then from there, what happened? The market then flushed towards the downside. So in this case, in a bullish movement, you would have took trades here, right? So that would be your first trade towards the upside, right? That would be your first trade, right? And then your second trades would have been around that area right there to the upside. Doesn't make sense. Now in a bearish movement, your trades would have been in this area right there, right? And then your first trades would have been there, and then your second trades would have come here, right? And then your third trades would have been here. Doesn't make sense. So that's basically what we are talking about, right? That's basically what we are talking about right there. That's basically what we are talking about when we're talking about supply and demand, right? So yeah, man, I hope it helped someone. On the next video, we are going to look into how to identify your proper supply and demand, how to identify your proper supply and demand, because right now it's just textbook. It's literally what I'm showing you. It's literally just textbook, right? On the next video, we're going to come back and look into how to identify proper supply and demand. That's where we're going to introduce your fair value gaps. That's where we're going to introduce your fair value gaps and your liquidity day and day, just to put it out there. Doesn't make sense. So yeah, man, let's link up on the next video. I hope it helped someone. If it did help you, don't forget to subscribe, hit that notification bell, and give me a thumbs up, man. Give me a thumbs up, you know. So yeah, let's grow together. Let us grow together. Let us grow together. Let us grow together. Yeah, man, peace out.